Welcome back to HNDA Financial Modeling. In this video, you are going to learn how to modeling the accounting process. First, we are going to get an understanding with regard to the content of the video. In this video, we are going to cover the accounting cycle, the double entry system, and the worksheet under the conventional financial reporting system. First, we are going to learn the accounting cycle under the conventional financial accounting or the reporting. The accounting cycle is a process of identifying, recording, posting in the ledger and preparation of trial balance and financial statements to closing the account. When we narrow it down, the accounting cycle is a sequence of steps that begins with the transaction and ends when a company closes its books. Accounting cycle involves several sequence steps. Now let's see what are the steps involved in the accounting cycle. Firstly, we are going to identify and analyze the transactions. Then we are going to record the transactions in a journal. Thirdly, we are going to post the transactions into a general ledger. Then we are going to prepare the trial balance before the adjustment, which is known as the unadjusted trial balance. Then we are going to prepare the worksheets and we are going to analyze them. As the sixth step, we are going to do the adjusted journal entries. These adjusted journal entries will help you to rectify the errors if there are any. Then we are going to prepare the financial statements based on the adjusted trial balance. After preparing the financial statement, the accounting cycle will close the books for the particular year. You know that based on the going concern concept, the accounting cycle has a foreseeable future. Therefore, these 8 steps will go round and round as a cycle and never ends until the company will close down. Double entry system is based on the duality of effects. It says every transaction has at least 2 effects. Double entry bookkeeping is an accounting system where every transaction is recorded in 2 accounts, a debit to one account and a credit to another. Now you can see, you know that in the financial accounting, there are 5 elements involved in the financial statements. Those are assets, expenses, liability, income, and capital. Now you can see how this double entry system will impact on each element. A worksheet, also known as the extended trial balance. It contains multiple columns that sometimes prepared in the concluding stage of the accounting cycle. It's prepared after unadjusted trial balance and is extracted from the ledger balances. The main objective of the worksheet is to have a clear understanding how the adjustments are made and their impact on the financial statements. Now let's see what are the parts of the worksheet. These worksheets can be prepared in 6 columns, 8 column, 10 column as well as 12 column worksheets. Let's see what are the parts of 12 column worksheet. It contains 2 columns for trial balance, 2 columns for adjustments, 2 columns of adjusted trial balance, 2 columns of trading account, 2 columns of income statement, and finally 2 columns for balance sheet or the statement of financial position. Worksheet start with the trial balance. Trial balance helps to check the arithmetical accuracy of the accounts. The unadjusted trial balance is the first part of the worksheet. The unadjusted trial balance that is prepared before the adjustments are made. It is a list of debit and credit balances of accounts shown on the worksheet as a starting step to verify the equality of the debit and credit totals. Adjusting entries is the second part of the worksheet. Only adjusted items are recorded here. Adjustment entries help to enter the financial transactions in the worksheet by providing separate debit and credit columns for such adjustments. But remember, the debit and credit totals of the adjustment should always remain equal. Now let's see what are the adjusting entries and how we are going to account it in the financial statements when we are going to prepare the worksheets for 12 columns. The first entry is the closing stock. When there is closing stock, we are going to debit the closing stock account and we are going to credit the trading account. The debit transaction goes to the statement of financial position. You can remember under the current assets, the first one is the closing inventory balance. Then the credit entry goes to the trading account. You can remember when we are calculating the cost of sales, we are going to deduct the closing stock balance. Now let's see how we are going to account if the goods lost by fire or theft is there. If we are getting insurance, then what we are going to do, we are going to debit the insurance claim account and we are going to debit the income statement and we are going to credit the purchase account. Debit of the insurance claim shows the cash given by the insurance company. It should be added to the cash account. And the debit in the income statement shows the loss. It should be transferred to the income statement. And we are going to deduct the cost of these stocks. It should be deducted from the purchase account. Therefore, we are going to deduct it in the trading account. You can get more information with regard to these stock damages and other adjusting entries in the separate video of the adjusted entries. Please go through it and update more knowledge with regard to these adjustments. Irrecoverable debt or the bad debt. When there is a bad debt, it should be treated as expense. Therefore, we are going to debit the bad debt account and we are going to credit the debtors account. Since this is an expense, we are going to put it into the income statement. Since we are going to deduct it from the debtors balance, we have to record it under the statement of financial position. Based on the prudence concept, it is advisable to keep a provision for doubtful debt. The debt which is doubted by the company whether it can be recovered or not. When there is a provision for doubtful debt, we have to debit the doubtful debt account and we have to credit the provision for doubtful debt account. Since doubtful debt is expense, we have to transfer it to the income statement. The provision is considered as a liability. Therefore, it should be credited to the statement of financial position. But normally, what we are going to do is from the net debtors, we are going to deduct this provision for doubtful debt in the current asset. Sometimes, the bad debt may be recovered by the company. When the bad debt is recovered, the particular customer or the debtor will repay us. Then we have to debit the cash account and we have to credit the bad debt recovery account. Since we are getting cash, we have to record it in the statement of financial position. And if there is a bad debt recovery, we have to transfer it to the income statement. Because it's an unpredictable income. Under LKS 16, we have to depreciate the long-lived assets. When the asset is depreciated, we have to debit the depreciation account and we have to credit the asset account. Since depreciation considered as expenditure, it should transfer to the income statement, and since we are going to deduct the asset value, it should record it in the statement of financial position. Let's see how we are going to record the revaluation. Upward revaluation or increase in revaluation indicate the current market value of the asset is higher than the book value. Then the increment of the asset value should be debit to the asset account and transferred to the revaluation account. The additional value in the asset account is recorded in the statement of financial position and the revaluation amount is recorded under equity in the statement of financial position. Downward revaluation indicates that the market value of the particular asset is lesser than the net book value. Then we have to debit the revaluation account and we have to credit the asset account. The debit in the revaluation account is identified in the statement of financial position and the decreasing asset value can be noted as well as in the same way in the statement of financial position. Under LKS 22, goodwill should impaired annually. There should be a impairment review for the goodwill on annual basis by a professional valuer. Here, we can recognize the impairment if the book value of the goodwill is lesser than the assessed value. In that case, we have to debit the impairment as the expense and we have to credit the goodwill as a decrement of the intangible asset. The expense of the impairment is transferred to the income statement and the decrease in value in the goodwill can be identified in the statement of financial position. Accrued expenditure indicate what we have to pay in the current period. This should be added to the expense account by debiting the expense account. And we have to credit the accrued expenses account as the liability. The expense should be transferred to the income statement and accrued expense is shown as a liability in the statement of financial position. Prepaid expenses means we have paid in advance for the next period. Then we have to debit the expense account as an asset and we have to credit or deduct that particular prepaid value from the expense account. Prepaid expense which is debited is recorded under current asset in statement of financial position and the deduct in the expense should be transferred to the income statement. Accrued income means income which should be received in the current period but not yet received. This accrued income should be debit to the accrued income account since it is an asset for the company and it should be credit to the particular income account. This accrued income is shown as an asset in the statement of financial position and this income account should be credited to the income statement. Sometimes we may receive the income in advance. Then we have to debit the income account for the next period and we have to transfer that value to the advance income account. The debit to the particular income account is recorded under income statement and advance income account should be treated as the liability in the statement of financial position. When there is a provision for tax, that particular tax expense should be debit to the tax account and it should be credited to provision for tax account. The tax expenses is transferred to the income statement and provision is shown under current liability in the statement of financial position. Adjusted trial balance is the third part of the worksheet, which is a combination of unadjusted trial balance and adjustment column. A trial balance prepared by incorporating adjustments is called an adjusted trial balance. The adjusted trial balance is a compiled worksheet of adjustments. A new account balance is obtained in the adjusted trial balance. To obtain the adjusted debit side balance, what we have to do, we have to take the debit side of the trial balance and we have to add the debit side of the adjustments. Then we have to subtract the credit side of the trial balance as well as adjustments. Then, if the debit side is greater than the credit side, we have to take the debit side balance into the debit side of the adjusted trial balance. If not, no need to put anything. Therefore, we are going to indicate it with the 0. We can elaborate this formula further. So what we are going to do is, if the trial balance debit side plus the adjustment debit side, from that we have to subtract the trial balance credit side and the adjustment credit side. If this value is greater than the trial balance credit side plus adjustment credit side minus trial balance debit side minus adjustment debit side, then we have to put the trial balance debit side plus adjustment debit side minus trial balance credit side minus adjustment credit side. If not, we have to put 0. Let's see how to obtain the adjusted credit side balance. If the credit side of the trial balance and adjustment is greater than the debit side of the trial balance and adjustment, then we have to put the credit side balance. If not, we have to put the 0. Now we are going to elaborate this formula further. If trial balance credit side plus adjustment credit side minus trial balance debit side minus adjustment debit side, if this one is greater than the trial balance debit side plus adjustment debit side minus trial balance credit side minus adjustment credit side, then we have to take the trial balance credit side plus the adjustment credit side minus the trial balance debit side minus adjustment debit side value. If not, we have to put 0. After doing this, you have to remember the total debit and credit of the adjusted trial balance should always remain equal. If not, cross-check your adjustments. Then we have to create codes for accounts relating to trading account as T, income statement as I, and statement of financial position or balance sheet as B. Then we have to transfer each figure in the adjusted trial balance into the trading account, to the income statement, and finally to the statement of financial position accordingly. Transfer to the trading account. First, we have to transfer the debit side to the trading account. For that, what we are going to do, we are going to refer the codes in the code column, and we are going to consider only the items relating to the trading account. If the code name equals to T for the trading account, then we are going to put the adjusted trial balance debit side value. If not, we are going to put 0. Now let's see how we are going to transfer the credit side into the trading account. As same as earlier, if the code name equals to T, then we are going to consider only the adjusted trial balance credit side figures. If not, we are going to put 0. Now let's see how to transfer the values to the income statement. Let's see how we are going to transfer the values to the debit side. Here also we have to consider the codes, but only relating to the income statement. If the code name equals to I, then we have to take the adjusted trial balance debit side figures, which is relating to the income statement. If not, we have to put 0. Now let's see how we are going to transfer to the credit side of the income statement. Here, if the code name equals to I, then we are going to take only the adjusted trial balance credit side figures. If not, we are going to put 0 there. Let's see how to transfer the values relating to the statement of financial position. First, let's see how we are going to transfer it to the debit side. Here, we have to consider only the codes relating to the SFP. If the code name equals to B, then we have to put the adjusted trial balance debit side figures. If not, we have to put 0. To transfer the credit side figures in the SFP, we have to take the code name, which is relating to B, and then we have to take only the figures relating to the adjusted trial balance credit side. If not, we have to put 0. After the preparation of trial balance, the trading account is prepared. A trading account is prepared to ascertain the gross profit of the company. Gross profit arises when the sales proceeds exceed the cost of goods sold. On the other hand, when the sales proceeds are less than the cost of goods sold, gross loss will incur. At the bottom of the worksheet, we have to write gross profit in the account name column. First, we have to balance both debit side and credit side of the trading account. If the credit side greater than the debit side, then we can see a gross profit. The gross profit should be recorded in the debit side of the trading account. For that, we can use the following formula. First, we have to take the difference between the each side. If the credit side have a higher difference, then we have to subtract the debit side difference from the credit side. In other words, credit side minus the debit side. And if this figure is greater than the difference between the debit side and credit side, then what we are going to do, we are going to put the credit side minus debit side difference. In other words, the credit side value. Then, if not, we have to put 0. After calculating the gross profit, we have to transpose the value to the credit side of the income statement. If the debit side is greater than the credit side, we can see a gross loss. It should be recorded in the credit side of the trading account. Here also, we have to take the difference between these two sides. Then, if the debit side difference is higher than the credit side, what we are going to do is from the debit side, we are going to deduct the credit side. If this value is greater than the credit side minus debit side value, then we have to put the debit side minus the credit side value. If not, we have to put 0. In other words, if the debit side is greater than the credit side, we have to put the debit side value. If not, 0. After calculating the gross profit figure, then we have to transport the value to the debit side of the income statement. The difference between the totals in the income statement shows the net profit or loss. At the bottom of the worksheet, we have to write the net profit in the account's name column. Then, if the total credits exceed the total debits, we can see a net profit. And if the total debits exceed the total credits, we can identify a net loss. Net profit in the income statement can be identified in the debit side. If the debit side is lesser than the credit side, in other words, the credit side total is higher than the debit side, then we have to take the credit side figure. For that, we can apply the same formula pattern. If the credit side minus the debit side figure is higher than the debit side minus credit side figure, we have to take the credit side minus debit side figure. If not, we have to put 0. You have to do the other way around if there is a net loss. We have to record it in the credit side. Finally, whatever the value, we have to transpose it to the statement of financial position. In the balance sheet or the statement of financial position, we have to balance both credit side and debit side. If not, you should check all of your work until the balance is tallied. Hope you have gained some knowledge with regard into the traditional financial reporting system, how we are going to follow the dual entry principle in the accounting cycle. To perform the accounting cycle, we are going to apply the worksheets. You have learned 12-column worksheet. But in theory, you can see 6-column worksheet, 8-column worksheet, as well as 10-column worksheets. Now in my next video, I will show you how we are going to do it in practically based on the past papers in the computer application.